All right, sweet. Thanks everybody for joining. My name is Michael Hassan. I got my partner, Jonathan Caras, on the line. We're going to talk about an overview of DeFi, what's happened primarily in the Ethereum DeFi ecosystem and why we think it's very relevant for Nervos. So here's the agenda: make Nervos great, I guess for the first time. We actually think Nervos is an incredible project, very unique positioning. That's what drove us to invest and to pursue, helping the foundation gain adoption, primarily in Israel, but also with the broader developer community, given the situation that's happened and everyone's at home. We'll give a little bit more background on ourselves. So we are Lionschain Capital. We'll talk a little bit about what is DeFi, what have the adoption and investment trends been in DeFi, why is it important for Nervos, what are some of the general categories of DeFi, how do we think about breaking it down, and then a potential way to think about a roadmap or framework for how the Nervos community can move forward in this vertical. So who are we? We are Lionschain Capital. Lionschain Capital is a multi-strategy crypto hedge fund. We invest and trade in the liquid markets as well as private markets. We really take a broad view of the space because we think it's early and you really need to see everything that's happening to invest smartly and to identify where value is accruing. So a little bit of background on our views. We are longtime Bitcoin bulls. In late 2018, we became very excited about what was happening with the decentralized finance movement on Ethereum. We believe that it basically represents a complete financial system native to the internet and will lead to a huge amount of innovation the way that the internet unlocked communications globally. We think that this type of technology can do the same for financial services. We think that there are risks with Ethereum, and so therefore it could be that DeFi will succeed on Ethereum, but it might not. And in pretty much late 2019, we came across Nervos through our research. We were looking through some of the big name projects that raised during the bull run, and wanted to see what was the progress and what might be interesting given the new intelligence that we had as the market had progressed. And we felt that Nervos provided an incredible focus on what we found to be the core value proposition of this technology, of really being a multi-asset settlement layer. And so we invested. We thought the team was great, very well thought out. And so we invested, and we even decided that we wanted to pursue helping the project break ground in Israel, where there's a huge tech community and a big opportunity to gain developer adoption. So
something to add here, just to chime in, Jonathan speaking, is that if anybody's on the call that's not familiar with Nervos, it's a proof of work, multi-asseted smart contract blockchain that is based out of China or originated from a group of a community from China. And one of the things that's very interesting in this space that we've seen historically in adoption of different technologies is that there is a regional aspect to it. And we think that Nervos, even though it officially launched its mainnet in the fourth quarter of 2019, there is a wonderful opportunity to look at what has been successful from a consumer perspective in the blockchain space, primarily on Ethereum, because that's really where we see success to date. There's some app users on other platforms like EOS and Tron, but we're skeptical about the longevity of such chains, and we think that there is a lot that can be learned from Ethereum and can be applied directly to the Nervos community with its focus of success on China. And for more information there, you can also look at the links that we provided below, and also some of the more recent interviews that have happened from the founders of Nervos, and then also from Delphi Digital's report on regional impact of blockchain growth and expansion.
Yep, and I'll share this deck after the call. We just put some links here to a piece we wrote about our general thesis on Nervos and how it fits into the overall crypto ecosystem, with some background on how we see the evolution of crypto to date. And then we also gave a presentation to an entrepreneurship center here in Israel that's on YouTube, which gives some background on crypto from a general sense as well. This presentation is primarily directed at people with within the Nervos ecosystem, and hopefully those with some background in what's been going on. So we invite participation for this call, you guys. Please feel free to unmute yourselves, jump in, ask questions. We'd like this to be interactive. One of the key values of the Nervos community is decentralization and being really community driven. So please feel free to submit questions or even interrupt us. Like, that's totally acceptable, at least in Israeli culture. So by all means. Great. So Jonathan just highlighted the chat for anyone who didn't see that. Great. And also we'd like to meet you guys. So what is DeFi? DeFi stands for decentralized finance. This was the term that stuck within the Ethereum community. People also like to use the terms financial primitives or money Legos, protocols for achieving specific financial use cases. One could argue that Bitcoin was the first example of DeFi as a permissionless store of value asset on the internet. And really, the DeFi movement takes that and says we can build a whole financial services suite around this on open source software for manipulating all kinds of digital assets, not just Bitcoin. It's the open source nature and the network effects that really can cause a real wave of innovation. And that's what we've begun to see on Ethereum, but the user base is still small. So what are some of those products? That could be DEXs, synthetic asset issuance platforms, borrowing and lending platforms, derivatives and leverage, prediction markets, insurance, advanced wallets, and asset management is a little bit level two, but we're starting to see that as well. Here is a nice landscape overview from December about all the different pieces that have been under development that sort of fit into this DeFi category. So as you can see, it's pretty robust. So here are just some charts showing the growth of DeFi over the last year and a half. One of the metrics that people like to look at is the total value of US dollars locked in these protocols, meaning how much is being deposited for earning a return, depending on the use case. So this is the total value in all the DeFi systems. It dropped off when crypto had its tank following the stock market crash during the onset of Corona. As basically what happened was these crypto assets serve as collateral in these protocols, and when the values dropped, there were mass liquidations, and so we saw a huge drop. But obviously, we see that that's ticking back up, and we anticipate that this chart is going to continue trending up.
And to be clear, we're only looking at these charts of the Ethereum ecosystem. So, and to put it in perspective for somebody who's not familiar with that, Ethereum has about roughly 75,000 active users in general. And within the subset of DeFi, which is where we feel the value drivers are, it depends on who you ask, but there's roughly 40,000 active participants. So almost $1 billion of value has been created or collected by roughly 40,000 people. So that's a small town in China, just to put that in perspective.
Or like a small village, like a city block.
Maybe even an apartment building. One apartment building.
Yeah.
Maybe that's a stretch. Okay.
Okay. So just looking at some particular protocols within that, MakerDAO. We'll get into what these are exactly. We'll explain them in a little bit more depth. This is a specific protocol for banking and synthetic asset issuance. Same type of chart. Synthetics, same type of chart. Compound, basically the same type of chart. Here we have decentralized exchanges. have started to mature. We're seeing new versions of decentralized exchanges launch, and with that, the volume on these exchanges is rising. So these are basically alternatives to Coinbase, Bitstamp, Kraken, Binance. These are being built in a decentralized way, running on Ethereum. So other metrics that people like to look at are, and people are starting to look at, is the earnings that these protocols are actually taking in. We're starting to see business models move in the direction of fees, and the native tokens of these assets give you the right to these fees. This is taken from Token Terminal, which is a great new portal for viewing a little bit more insight into what's happening in these projects instead of something like CoinMarketCap. I think Mika, who is the founder, was going to join this call. I'm not sure if he's here, but it's really a great new product. So as you can see, even though we're still at low levels of adoption, some of these are actually pulling in significant amounts of fees. Jonathan, anything to add?
Yeah, well, it's again, just to emphasize that less than 50,000 people can create $5 million of revenue, and that's pure profits, because the cost of operation is so low once you have the software running. That's what makes building a robot banking system or robot financial primitive so powerful, that once it works and once it becomes a critical element of a financial Lego system, then it essentially runs by itself with, relatively speaking, low human maintenance. But if it becomes a key component of a financial system, then it has the ability to take fees. And then we see these numbers: Eraser at over 2 million, DYDX at over 2 million, Kyber over 2 million. I mean, this is there isn't really another industry where we see similar numbers compared to how many active users there are.
So early on. Okay, so here's just a portrait of what's been happening with the fundraising. Let's see, Jonathan, your sound is not coming in clear. Someone mentioned. Okay, I think it's okay.
Okay. All right, I'll try. Maybe I'll turn my video off. Go ahead.
Okay, so just to highlight that these applications are attracting investment from top investors globally. So this is non-trivial, and it's growing. So Compound just announced recently, the end of last year, $25 million investment. Here we have Balancer, Zerion, Argent. These are similar offerings, which we'll describe later in the presentation. Seed stage companies going after a big use case, all raising significant sums for early stage investments recently. Uniswap as well, probably going to have another round soon. Celo is a decentralized stablecoin platform that raised 30 million last year and just closed another 10 million yesterday. And so just to give just to highlight the point that this is an area which is attracting investment. And so if we want to build sustainable demanded applications on Nervos that will create a healthy environment, it'll be great to have external capital flow to those. And this is a market which is attracting that demand.
Something to think about here, I turned my video off, so hopefully the audio comes in more clearly now, is that even though we have the grant program today, which is, and for those that aren't familiar, there's a $30 million grant program. Thank you, G. Rook here. There's a $30 million grant program for Nervos, and there's a $5 million accelerator or incubator that are designed to help get teams up and running on the Nervos CKB blockchain. Now, that's a great way to kickstart a system, but ultimately what we're going to need is that entrepreneurs with great ideas are able to build proofs of concepts with relatively low barriers and at low costs, and then they'll be able to take those proof of concepts out to traditional investors to be able to raise money on them, or possibly even raise money in token offerings, as we saw in 2017 on Ethereum. Now, what we need to be thinking as members of the Nervos community is that how do we make sure that by the time that $30 million and $5 million is spent, that we've created the infrastructure so that companies like Compound, Balancer, Zerion, Argent, Uniswap, et cetera, are able to be created and then able to self-fundraise.
Great. And for those that joined, please, we mentioned earlier, just feel free to chime in, ask questions, and interrupt. And we want this to be interactive as much as possible. So beside the investment numbers, we're seeing that these technologies are having an actual real impact on people that need permissionless financial services. So this was a presentation that was done by Mariano Conti at the Maker Foundation, where he explained how living in Argentina, he was able to avoid the 50% inflation, devaluation of his currency by getting paid in DAI and using these crypto systems as essentially his bank account. So this is a great presentation to watch to get a sense for how people could live off this, even at its early stage. So why is this important to Nervos? Nervos seeks to become the home for first-class assets. So this is a really unique thing here that we love, is the economic model that is optimized for sustainable security and maximal trustlessness, which is reflected throughout the design choices of the protocol. And that's really why Ethereum has attracted the DeFi movement, because that's the core value proposition, especially at its current state with low throughput. You don't need high throughput numbers for this use case. The Nervos team seemingly saw this and understood this early on, and that's why they went for the layered approach. And so Ethereum offers the ability to settle arbitrarily defined assets, but it's not optimized for sustainable trustless settlement. And additionally, there's no really consensus in the Ethereum community about what Ethereum should be. There's these, there's been an ongoing debate around, is it a world computer? What does the Ethereum 2.0 look like? Introducing sharding and proof of stake. It's not going to be necessarily so smooth. Internally, when we debated, our Ethereum investment thesis, we said that Ethereum 1.0 could be the biggest competitor to Ethereum 2.0. Just because it has found this product market fit with an incredibly high value offering that we believe the DeFi use case to be. That being said, we would much prefer to be investing in a place where the core focus is optimized on that use case, and the design choices of Nervos point in that direction. And just a note on gaming and other use cases, a lot of people, investors, talk about layer ones focusing on other use cases such as gaming and not going after DeFi because of Ethereum's entrenched lead as the leader. Ultimately, we believe that gaming is a financial use case, because the innovation that these systems are bringing to games is to make the assets within games open financial assets which can be traded within these systems. And maybe one day creating governance and ownership systems of the games themselves, where you could have the users have a say in the actual game dynamics. But all of that is really a financial innovation in essence. So Jonathan, do you want to chime in here?
Yeah, I'd say that we've seen over the last couple of years a few different platforms, whether it was Tron or EOS, even Ripple, attempting to make progress with creating value through addressing just an entertainment or a gaming or collectible use case. But there wasn't really a lot of success outside of the Ethereum space. And I think that one of the reasons why was that there wasn't a robust decentralized finance infrastructure built on these other platforms. We've seen with applications like with Decentraland, really one of the things that makes Decentraland so interesting is that you can, through a decentralized exchange, trade land. With things like cryptovoxels, you can build out your space and have your artwork. You can, and they can be lent. They can be used as collateral. We've seen true on-chain randomness be implemented into into things like some of the more popular games like Gods Unchained that were infrastructure that was initially built for financial means, whether it's the exchanges or closed auctions or various other elements, and then they were adopted as consumer products within the gaming space. So we think that, again, to answer the question of where should Nervos be focusing at this stage, it really is about building out the financial primitives, and the financial primitives, when you combine them together, create the decentralized finance movement, or DeFi.
All right, Jonathan, go ahead, continue.
Sure. Okay, so now we have to ask ourselves, who is the Nervos community? Really, everybody that's on this call counts as the Nervos community, because one of the beautiful things about a proof of work network is that you don't need to own a certain amount of tokens in order to be part of the network. You don't need to participate in the mining to be part of the network. Really, if you want to be part of the Nervos community, you just have to show up and care about Nervos. And I think that's the reason why most of you are on the call today. And for those of us that view ourselves as part of the Nervos community, so then we have to ask ourselves, where should we be focused when we talk to people, when we talk to other developers, when we talk to investors, when we talk to general consumers about Nervos? What's the vision that we should have in order to make Nervos great? Whether it's make it great again, make it great for the first time. It's a relatively young product, but make things great again is a funny meme at this point. All right, next slide. Okay, so we have to look at what could be produced and what is already being produced. So we have token standards that are being created, and those, for example, we've got the first one, which is the simple user-defined token, and that is a way to standardize. That's like the equivalent of ERC20 on Ethereum, if you're familiar with that. So we're creating something similar there, and we'll get into more details of all of these. So then, once we've got a standard token, we've got to make an easy way to be able to issue tokens. In addition to that, we've got to make stablecoins. Stablecoins are a critical part. I don't know if you've seen, but stablecoins are quickly becoming the largest volume transactions in the Ethereum ecosystem, surpassing the native ETH token and surpassing any other ERC20 tokens. So we're very excited to see stablecoins come to the Nervos network. In addition to that, making decentralized exchanges, places where you can trade from speculative tokens to stable tokens, and then lending platforms which have a two-edged sword to them. And I'll get into more detail there, but really lending offers to one type of person, which is the person who wants something stable to be able to earn a little bit of interest on it. And sometimes that interest is 10 times what you would get from a traditional bank. To offering leverage and margin for speculators. Then there's more advanced, which we'll talk about also, which is better onboarding, like over-the-counter OTC trading desks, more advanced DEX solutions, synthetic tokens besides just stable coins. What about Apple stock issued on Nervos, things like that. More advanced wallets, ones where you can back them up and restore them, where you don't need to measure where you don't need to remember a key phrase, aggregation services, which bring a lot of these DeFi tools together, and then ultimately gaming and NFTs. So next slide. All right, so as we said before, token standards are very important. There's 3 token standards which are the most popular on Ethereum. One is the ERC20, which is what anybody can easily mint to make their own token with their own logic. ERC721, which is a non-fungible token, which could be an asset in a game. It could be an ownership or a deed. It could be a rights to ownership of a particular digital object or real life object, and then a more advanced version of that same token, the 1155s. And we've seen a number of proposals for new types of tokens. And one of the advantages of making standards of tokens is that it makes it really easy for multiple developers to be able to create code that works seamlessly with each other. So this has been very popular. This has been very powerful for Ethereum, and we see that it will become quickly very powerful for Nervos as well.
Yep, and we had some new people join the chat, so just wanted to reiterate, feel free to ask questions in the chat or even unmute and chime in and interrupt. We'd love to make this as interactive as possible.
No problem. Keep going on.
Yeah. Oh, hey, Will, how's it going? So stablecoins, awesome. Stablecoins are very important, and stablecoins allow you to be able to collect a fee in something that's easy for the customer to understand. So if I'm going to be charging, if I'm going to build a business and I want to have my business be built on Nervos, it makes sense for people to be able to use the currency that they're familiar with conceptually and the pricing that they're familiar with conceptually in order to pay for my service. That's one use case of stablecoins. Another use case is that if I am a speculator, I can use a decentralized exchange on the same infrastructure to be able to trade my speculative coin, like for example, CKB, for a coin that's designed to keep its value over time. The most popular stablecoins in the market today are pegged to the US dollar, but we could even see where Nervos could be very interesting is to create stablecoins that are pegged to other currencies. The US dollar, we can't avoid is the world currency today. And so there is a use case where many people all over the world, like for example, if you were from Taiwan or from Thailand or even from Israel, that there are many Israelis that struggle to get access to a bank account that can hold US dollars. Being able to have access to an easy on-ramp and a high liquidity US dollar stablecoin solves a real problem that multiple billions of people in the world have today. And even though there are tens of thousands of people on Ethereum that are using stablecoins like USDT and USDC, we anticipate that the market and drive for stablecoins over the next 5 years is going to drastically dwarf where we are at today, and Nervos could own that market. All right, next we will have a recording of all this after.
Yeah, and we'll share the recording and we'll share the deck, so it's all gonna be available.
So Michael, you want to talk about DEXs a little bit?
Sure. So basically, this is the infrastructure for enabling the swapping of all of these different digital assets that have been created in this ecosystem, and there are different approaches to them. So you have the automated market makers, which started off with Bancor, and Uniswap took that model, took out the token, and went off to the races and became the most popular form of exchange on Ethereum in the decentralized finance movement. And we've seen more advanced versions of that come out with Balancer and Curve. Jonathan, you can probably give some more color on that, but just to briefly touch on the others, we have the order books exchange, which more closely resemble a traditional exchange architecture. So 0x achieves that through both an on-chain, partially on-chain, partially off-chain order book. Oasis is the exchange that MakerDAO uses. And Binance launched their own decentralized exchange on Cosmos. And then we have aggregators, which tap into multiple liquidity pools to give their users the best price. So those include Kyber, 1inch. Kyber is sort of its own thing, but also taps into other liquidity pools. And then you have 1inch and Dex.ag, and there are some other competitors to those as well. The guys from 1inch are really sharp and had a more in-depth discussion of this topic. So I put the link here. Is there anything you wanted to mention about AMMs versus well,
what I'd say what's most important about DEXs is that there's no censorship. That anybody, once you get an access to a stable coin and DEXs exist, then you will be able to seamlessly move between any speculative asset or token that you that provides some type of a service for you or enables some type of a service, and you'll never be cut off by a local government, by a regulation. It really opens up the permissionlessness in a way that is difficult today on platforms like Bitcoin. It might be great.
Yeah, I was gonna add that more advanced use cases, which we'll highlight in a bit, basically plug into these exchanges. And as a user who is managing his portfolio and just wants to get, a certain target return, or just wants to do things at the click of a button, you can get interfaces which make this all easy, and then you just can rebalance your portfolio with a click, and all of a sudden it automatically gives you the desired portfolio by plugging into the APIs of these exchanges. So it's really something that becomes a building block of a full decentralized finance ecosystem. And by the way, we did an interview with the guys who are building UDT Swap, an initial attempt at building something like Uniswap using the UDT standard on Nervos, and so we're really excited about tracking the progress there. And we had a interview with them on our blog, which we can post as well.
So I see there was a question here about what do you think about the direct IoT connection for Nervos CKB? So I'm not familiar with that project. So it asks here, is this a good idea for an application to get the grant program? So I would say that that it's always interesting to take a project, especially a project that has been polished or well defined on another platform like Ethereum, and then see how some of the aspects of CKB or Nervos could enable new use cases or advancements. This one in particular, I'm not familiar with, but if any of you guys that are watching this are building something or have built something outside of the Nervos ecosystem, we definitely would like to hear about it and to brainstorm with you about some of the benefits that you could have by getting involved in the community here.
Yep. So lending platforms. Go ahead, continue, Jonathan.
Yeah, so lending platforms are as I mentioned before, they have two different edges to them. One is that if I'm financially conservative and I want to take my local currency and then turn it into a crypto US dollar, and then I want to be able to put that into a savings account where I'm going to earn 5% interest, or some cases it's been as high as 18% interest, and sometimes it's lower, like 0.5%. But let's say on average it's 5% interest annually. So a lending platform allows for me to give a loan to a speculator, and that speculator can then take that, they'll put up collateral, in this case, let's say in the form of CKB, CK bytes, and then they'll receive with their collateral the stable coin that I lent to them, and they'll be able to use that to buy other speculative assets, which essentially is a form of leverage. And they also can use that both to leverage long and to leverage short. So it's a very powerful financial tool that offers low-cost margins for traders. And then I, the conservative person, benefit from it by receiving the interest. So that's how Compound works. And this is really the first use case that I feel is relevant for 1 billion people in the world. And I think that the faster that we can get stable coins, good wallets, and Compound onto and decentralized exchanges onto Nervos, the faster that we're going to be able to see 1 million monthly active users for the Nervos platform. Maker is also a very interesting platform where they actually use speculative assets for specifically Ethereum in order to be able to mint a stable coin called DAI. It's a little bit more complicated because it's creating a new stable coin, but it is very interesting because the stable coin is it doesn't have the same trust factors. It has a number of trust factors which are outside of the scope of this meeting, but it does have less trust factors than something like Tether, where you just have to trust that a company will redeem for US dollars the amounts of tokens that they print. And then Ava is a very similar platform to Compound, but it also has, instead of having long-term loans, it also has the opportunity to create short-term loans, which can enable a number of really interesting financial instruments, where if you just need it for a very short period of time, a large amount of money in order to perform an action that historically was only available to a whale, to a large market maker. Essentially, anybody can become a large market maker, and then I can be a lender to allow other people to participate in whale type activities. So this is all cutting edge stuff, but what we've seen is here, they've been around for about 3 months, and they already have over $50 million locked in their contract. So very quickly, we anticipate that once this infrastructure is built, we're going to see numbers like this within the Nervos ecosystem.
Yeah, so here's just some other topics which we didn't dive into in depth because they're a little bit more advanced and they came along a little bit later within the evolution of the Ethereum DeFi ecosystem. But asset management, we're starting to see some really cool applications come out of Set protocol for basically auto balancing portfolios. Like you can basically follow traders, or you can buy into an algorithmic trading strategy that will automatically rebalance. So once you have these decentralized exchange protocols, and they're also they plan to tie into derivatives protocols and synthetics protocols. You'll be able to basically buy, it's like you can invest in a hedge fund automatically through a smart contract. So then you have predictions markets as well, Augur and Gnosis. We encourage people to take a look at those. Insurance, there was an article written about how the insurance risk that Nexus Mutual covers on Ethereum is less relevant with the architecture of Nervos. So we anticipate that some of our recommendations may have a specific nuance as they're applied to Nervos, but it's probably worth taking a look. And we anticipate that insurance in general will have a place in this ecosystem. Non-fungibles and gaming, Gods and Chain, Axie Infinity. There's a handful of gaming games that have basically started to see adoption and see their assets really accrue value. So worth taking a look there. Privacy, Tornado Cash is an interesting mixer that just came out, zero knowledge proofs. There's a lot of work that's happened there on Ethereum.
It's actually very, very interesting. One of the things that is a pain point on Ethereum is that they have stable coins, which are incredibly useful, by far the most popular use case, but they have zero privacy. And because also that it's an account model on Ethereum, anytime if I want to pay you, then I have to reveal my entire financial history, and you have to, and you put at risk your entire financial history, because we can both just look up on a block explorer. You can see everyone else that I've sent money to from this account, and I can see everybody that sent money to your account as well. So the lack of privacy is a serious hindrance to growth on Ethereum, and it's non-trivial to build a good means of private transfers on Ethereum, and the dual layer infrastructure and the cell model of Nervos may act as a better home for private stablecoins. And this is something that we've heard about a few times in reference to Nervos. So we're excited to see somebody really take ownership of that project.
We should probably add that to the slide deck before we post the link, because having some sort of native privacy layer will and then having some DeFi utilities could be an actual real differentiator very early on, the combination of the two. And then the last one was on-ramps like SendWire and Simplex. These are utilities which enable easy onboarding into crypto basically from a wallet. So we will review some nice wallet experiences here in a couple slides, and you can, with some of these advanced wallets, you can just easily buy into crypto with your credit card instantly with some of these services. So that's something that we would love to see as well.
And not just from your credit card, but also Apple Pay, Google Wallets. And one of the things that we'd be excited to see, especially for the Asian market, is the ability to use AliExpress payments mechanisms, WeChat's payment mechanisms, Kakao Talk's payment mechanisms. A lot of these chat apps already integrate with your bank account, and being able to have an easy on-ramp to CK Bytes and stablecoins built on Nervos should help gain adoption significantly.
So basically what we're getting to is if you stack all these together, you can now get to some really nice user experiences. So the goal is to get to this point, basically. So we're going to go through a few different products which take a slightly different angle at essentially creating a good user experience for the end user. All right, John, quickly want to describe these?
So one of the things that we've seen here is for the more complex is portfolio management. So we really should add SET to this as well, because they kind of fall into that. SET was previously mentioned. It's a project that we invested in in the Ethereum ecosystem, and it creates essentially index funds that then auto balance. So InstaDApp it takes a lot of these applications like Compound and MakerDAO and more of them, and Uniswap pools, and then allows you to become market makers or liquidity providers based on the risk appetite that you have. Xerion does something similar. They're also expanding to produce APIs and SDKs for app developers within the Ethereum ecosystem today to build more complex applications like InstaDApp. And we see that this is only going to grow, that you will be able to, everything that you could do at a traditional bank, you will be able to do on Ethereum probably within about 6 to 18 months. And we think that this is incredibly practical for billions of people on the planet. And these are the types of things that are clearly gaining traction, and these are what need to be brought to Nervos in order for Nervos to be relevant, looking for both today and 5 to 10 years from now.
Yep, and here's some other examples of products with good user experience. So Argent and Zengo are advanced smart wallets that sort of position themselves slightly differently. Argent is focused, they're both focused on a really great user experience and a really great access point to crypto. Argent is trying to make it so that you don't need to worry about a private key, but that it's still incredibly secure. Jonathan, describe what their security mechanism is.
So so some of them use, so not just specifically these two, but there is today, instead of having keys, there is the ability to be able to essentially virtually break your key up and have it stored in multiple locations, that none of those locations have actually the same thing as your private key, but they can be combined to sign a transaction. So this technology has allowed with Argent to be able to create smart contract wallets that don't use keys, and Zengo to be able to make a map of your face and then actually back up a section of your private key to things like your cloud storage on your iPhone or your Android phone. What Wallet Connect has done is able to create transactions that happen on one device where the private key is stored on a different device. And that's actually very interesting, because now I can have on my mobile phone my private key stored, or even possibly something like combining these two, have my private key broken up and stored in multiple locations, like with Zengo's implementation. But then the way that I actually would access my application like InstaDApp or any of the other decentralized finance tools would be connecting through a technology like Wallet Connect. And we've actually, the most popular Nervos wallet, which is called ABC, I had a call what do we say? Zappo, we've got somebody chatting here.
Zappo is an exchange, no? And
I'm not familiar with Zappo, but it could be that they have a similar implementation. And one of the things that we're excited to see is when you have technology like a good wallet, and the most popular wallet for Nervos today is called the ABC wallet, and they are incredibly popular in Asian markets. I actually had a call with them earlier today, and they are integrating with Wallet Connect, and so it'll be exciting to see technology like Wallet Connect come to the Nervos network, so that when you have a wallet like ABC and then you want to interact with a DApp on your computer, on your laptop, you'll be able to just scan a QR code and then instantly interact with it. So it makes it much more seamless. And there's a great presentation from one of the DevCons, maybe it was DevCon 5, which was a primarily Ethereum event, where they demonstrated how dApp developers are using smart wallets and Wallet Connect to be able to create excellent user experiences which are ready for prime time. And again, we come back to the same concept here, is that we want to get Nervos ready for the prime time. We want to get it where it doesn't just appeal to crypto enthusiasts, but yet our mothers, our uncle, you could tell the falafel guy about it, and then he could easily just get on board it, and then start earning money. So yeah, talk to us a little bit about what Dharma does.
So all three of these slides are basically different approaches to creating a smooth user experience. Where Zengo and Arjun are more on the security, making the access to your wallet both easy and secure. Zerion and Instadap are about accessing a suite of services in a seamless, integrated way. Dharma is coming at it from the angle like, we just want to make this the best user experience so that people think they're just dealing with the best fintech online banking product, and it happens to be that the interest rates are coming from this crypto financial system. So all of these are really coming at the same issue from a different angle, which is how do we onboard the general masses to use this system, so that they don't really know they don't need to know all of the architecture and the background, and they don't need to be a technical user. So
we have a comment here from Jibruker, who said education is the word. I would say it's 2 points, because I first heard about Bitcoin in 2011, and I was, and then I became reintroduced to it very heavily back in 2016. So I've spent, and I've basically since 2016, I've been explaining to everybody that was willing to listen, what is Bitcoin and why is it valuable and why they should own some of it. And even the people that they understand the philosophy, they say, oh, it's a limited supply commodity money. It can't be inflated by any government. You can't just have a printer that goes and just, doubles that hyperinflates your local currency, which is a hidden tax on citizens. And they get all of that. But then I start saying to them, okay, so are you going to buy some? And they say, well, how do I get it? And you get into, okay, you have to open up a Coinbase account. Now you have to send them your picture, your driver's license. Now you have to hook up your bank account. Then you have to do a wire transfer. Then you have to wait like a week. And then you have to go into the exchange, and then you have to make a market order. It is something that it's not just about education. It's about creating the user experience that's easy. So we got a great question from Anson about what makes CKB a store of value. So I'll answer this, and then I'd love to hear Michael's answer. So there's two things. One of them is that it is there is a fixed supply of ownership that you can have of the whole network. So very similar to Bitcoin, meaning that if I buy, let's say, 1% of all of the CKB that exists, and I stake that into the Nervos DAO, I will always own that percentage of the network. The same way with Bitcoin. One of the things that it solves that Bitcoin may struggle with in the future is the when issuance drops down. So then you get very interesting, game mechanics and tragedy of the commons around block
the security
production.
of Bitcoin.
And, yeah, exactly.
Basically, the benefit of Bitcoin is that you have this decreasing block reward, but potentially that could be a problem going into the future if it creates perverse incentives for the people that secure the network. Kevin had a interview on Delphi Digital's podcast last week where he described, the potential for block producers to, Jonathan, you want to describe that, where he's talked about how a block producer, if he can make more money on fees from the next block than he would from the reward on this block. It's a little bit technical.
Yeah, he might. I think that's outside of the scope of this conversation, but I think Kevin did a great job. And if you're not, yeah. But what I would say is that one of the key differentiators with CKB is that CKB is not only used to pay for transactions like Ethereum, like ETH and BTC. BTC, if you want to send Bitcoin, you have to pay in BTC. If you want to make a transaction on the Ethereum network, regardless of what coin that you're using, you have to pay miners in the ETH token. So that means that the model, the payment model, is
the economic model.
The economic model is primarily a transactional model, whereas CKB is actually used to rent state from the network. So if you want to own a portion of the current state of the network, so then you need to rent that over time.
It's like real estate. As real estate is a store of value because it's a unique utility which has a limited supply depending on where you buy your real estate. It's the same type of thing. Nervos is offering trustless settlement for any digital asset which needs to purchase this state, which is like land. And it's basically saying we're taking the Bitcoin model, except that we are using the fact that the reducing issuance could be a problem, and saying we're going to compensate for that with the value proposition of offering offering settlement to arbitrarily defined assets. And what we're seeing on Ethereum is that that's the key use case of Ethereum, except that it's not, the economic model is not designed to capture value from the settlement of those assets. And then you tie in the fact that it's proof of work, which optimizes for permissionlessness, and anyone can come in and be a validator in the network. Whereas with proof of stake, you have a potential risk at some point that the current stakers can keep out newcomers, or there are a lot of governance risks with proof of stake. It's a much less proven system. So with the proof for a store of value asset, you really need that maximal decentralization and maximal permissionlessness, which only Bitcoin has really proven that it's been able to capture. And Nervos is saying we're not reinventing the wheel on that point, but we're taking the benefits of multi-asset settlement to compensate for some potential weaknesses that could come long-term, and offer the benefit of all of the innovation that we're seeing happen on something like Ethereum.
And just to be clear, this isn't, there's many people in the space that are very tribalistic that view it as, once Ethereum came into existence, now Bitcoin was obsolete, or there's this narrative that Bitcoin will eventually just be an ERC20 token built on Ethereum. And then obviously there's the Bitcoin maximalist view of everything that's not Bitcoin is a shitcoin. And we really don't adhere to any of this. I think that Bitcoin very much has a unique position in this market, and it's unlikely that anything will ever dethrone it while it still exists. What I do think that there's a huge opportunity here is that there's a blue ocean of billions of people in the world. Right now, Ethereum has captured, let's say, 100,000 people, half of them developers and then half of them speculators. That's not a lot. That's a small city. There's the entire Asian market that is ripe for the taking. And I think that there's no other chain that's better positioned to own those markets than Nervos. So I see a world where Bitcoin is incredibly successful, even where Ethereum is incredibly successful. And Nervos owns an empire that puts it not at its current value of roughly $75 million market cap, but puts it at, you know, what's Ethereum's market cap at today? It's like $20 billion.
Yeah.
So what's that? That's the next. We could be seeing a Nervos market cap, not at $75 million, at $75 billion. Obviously, that's total speculation, and I have no insights of the future or price or anything like that. And that's not financial advice, obviously. You got to do your own research. I'm just trying to put into perspective of the value that Ethereum has created for the world. That if we work together to push Nervos to actualize the path that we've outlined here, we think that there's a high likelihood that there will be more active users on Nervos than there will be on platforms like Ethereum. And that probably, although not guaranteed, but that probably will have an impact on how much demand there is for the CKB token.
Yeah, so that's what we wanted to outline, was that if we make the right choices on what the development community should be focusing on, and it actually gets built, then we could be seeing, you know, mass adoption in no time, especially with some of the initiatives that the Chinese government is pushing in terms of blockchain adoption. We'd love to see this, you know, get carried over to the English-speaking community, because we still think that Nervos as a whole brings a unique value proposition to crypto in general. And so what we're working on is, you know, we were working on that in terms of introducing the project to the Israeli ecosystem, and we're working on that in a more global sense now. We proposed on the Nervos Talk forums an initiative to create a community-driven video to articulate and outline some of the key concepts of Nervos in a short-form video series. We'd love to get you guys involved in that. Please check out the forums. We also put it on Reddit because of the upvoting system and trying to prioritize engagement, but we haven't even gotten much engagement. So we'd love to invite you guys to be a part of that.
And there's a very active community about Nervos on Discord. You know, we should probably put the Discord link somewhere in this presentation. Yeah, it's you know, it's a very interesting project, and we think that it's just getting started. We've been involved in it for about a little under a year now, and we've seen it grow leaps and bounds. You know, you compare it to some of the other projects that we also really like, but we've seen them move much more slowly. Like if you look at how long it went from launch for, you know, but from the time that Tezos launched to the time that Tezos had its equivalent of an ERC20 token. And if you compare that from how long Nervos launched to how long Nervos had its UDT, its user-defined token, you know, and then people building DEXs and people building issuance platforms and creating an IDE so that you can program in JavaScript or C or Rust. I've been professionally watching this space for, I don't know, what is it now, 4 years, and I just have not seen a team that moves as quickly as it's not even team, because it's multiple people, but it feels to me like everybody that's working on the Nervos project has like fire under their belly to just make progress. And what our goal is just to make sure that progress that they're making is unified to create a synergistic goal. And that goal should be massive adoption.
Yeah, and this is all coming from our perspective. Feel free to push back on this. We try to emphasize that we think this DeFi use case is really special and is a great fit for this ecosystem.
And yeah, and there's some great follow-up material here. You know, and Will is actually put some interesting stuff in the chat here. Is that 1 CK byte gives you 1 byte of storage on the Nervos network. So the more that it's used, the more CKB will be locked up renting those storage, renting the storage. So it's almost like it's more tenants. The blockchain is a real estate play. So what he's saying here is all the data on chain uses CKB for storage, and that's why Nervos, the network, captures the value of the application layer. The more customers, the more users there are that are actually using Nervos, the more renters there are paying to use it, and not just transactions.
And it's really important also to highlight the point about permissionlessness, trustlessness, decentralization, censorship resistant, whatever you want to call it, as a key foundation of something that enables an asset to be a store of value. That's why Bitcoin is the #1, because people can be confident that the supply of Bitcoin, the mechanics of the system, all of this will be consistent and will stay true to itself over time into the future, because of proof of work and all of these, and the decentralization, all the things we just mentioned. And Nervos has taken that and adopted that, whereas a lot of the other layer 1 smart contract platforms are going in many different directions, seeking to be higher throughput. And so this is really the key. This is really the key point about a layer 1 settlement.
Yeah, we have another comment from Lalo that every cell that's created, and cells are like are multi-use, but you can think of them like blocks. They're like more advanced blocks. Every cell that's used essentially burns 61 CK bytes, because again, the cell takes up state on the blockchain, and so it needs to pay for that state. So there's a number of just sync mechanisms that are inherently built in, and you can read more about that in the positioning paper. And the positioning paper was really what made me fall in love with the Nervos Network. So if you're interested, highly recommend that. And part of what we want to do with the video series is take a lot of the concepts from the positioning paper and then present them in a really easy way to understand.
Yeah, what we're trying to do is drive value, guys. So please get involved with the video project. If you think it's something that can attract adoption and get the Nervos message out there. I posted here at the end, let's get the flywheel moving. Kevin had a great talk that doesn't have a lot of views on YouTube about the flywheel economics that are embedded into the Nervos architecture. Really worthwhile checking that out. And yeah, thanks you guys for coming. Love to hear any feedback.
I want to say one more about value capture, because in recent, I found a lot of KOL of DeFi or Bitcoin have talked about value capture's problem. Yeah, because in recent, the stable coin on Ethereum network, maybe they will threaten the security of Ethereum, because stable coin like USDT from last year, they turn from the OMI layer to Ethereum, and right now stablecoin share a big part market cap, like 1/3 on Ethereum network.
So and it's not even stopping. It's we're in a year there's going to be more value on Ethereum. The market cap of Tether on Ethereum could be greater than the market cap of the ETH token. It's crazy. Yeah. And nobody, sorry to cut you off, Will, but just I think what you're getting at, and correct me if I'm wrong, is that nobody who's holding USDT is paying for the security of the network. So they're essentially they're leeching off of the network, and they actually put downward pressure on the value of the ETH token because of that.
Yeah, and if you found the Tron situation, it would be more terrible than ETH, because right now, all of the USDT on Tron, the market cap is bigger than all of the Tron network. So it is very terrible. And in the near future, we can find out a lot of validator or miner may feel the asset on the chain is become more attractive than native asset. And when this kind of situation happen, hijack become very tempting thing for them.
Yes, it becomes an attack vector when the value of the assets on top of the layer one are significantly more valuable than the native asset itself. And the other point we didn't mention when someone asked about the value accrual of CKB is the limited state. So with Ethereum, you have this ever expanding state, which becomes more of a burden for the nodes to run, which then puts a strain on decentralization. And decentralization, as we know, is a key pillar that enables the censorship resistance and so forth. And you can't have a store of value without the censorship resistance. And so, it's been very clear to us that the architecture that the team put together was incredibly well thought out to benefit as use cases are built on top of this. So as many other chains are chasing scalability and making other trade-offs, we think that this project is really focused on the right things to build the right foundation. And we're really excited about DeFi, and we still are. We think it's incredible use cases. This is going to be a new wave like the internet, but we wanted to make sure that it happens, and it's got to be built on the right platform. So we're really trying to emphasize this point. If you guys agree with us, we got to start figuring out how to spread the message and get things built. So really appreciate all your time, guys, and happy to take any more comments here. It's good that we got everybody on the line.
Oh, and there's a great Nick Carter's piece. Yeah, I like this. Crypto fiat, mutualistic or parasitic? Yeah, this we should probably put a link to in the article as well, in the presentation as well. All right, guys. So we are Lionschain Capital. Jonathan Caras. I'm Madcaps Laugh on Twitter and Telegram. Michael Hasson. We're community managers in Israel with a global focus. And we're looking forward to getting your feedback to make this community video. And we hope that you'll join us in the next meetup.
Awesome. Thanks so much to everybody for joining, guys. Stay safe.
All right. Bye.
Bye. Bye.
Bye-bye.